Ladies and gentlemen, welcome back to the channel. The markets are rebounding following yesterday's pretty rough day for the NASDAQ, down over 3.2%. You are in the green today, heading into Micron earnings. I want to give you a final update on Micron expectations and my thoughts heading into Micron earnings and what it could mean for the markets. Now, beyond that, we have big news today. Oil is plummeting. You have bond yields that are coming down. There's a shift that is happening in the marketplace. And I want to talk about that in this video. It will help you to make more money because I think we are early to this shift. Scott Bessent today and Trump came out with a lot of news. Scott Bessent, in particular, I think is important to pay attention to today because of his comments around the Fed and rate cuts. And this is one reason why I think this market presents a lot of opportunity right now. I think the markets are overly hawkish on the Fed. We'll see. We do have some data coming out tomorrow that's going to be critical. We'll talk about that in today's episode as well. Guys, we have a banger for you today. As always, hit that like button, subscribe to the channel if you guys have not done so already. If you guys want to come trade and invest alongside of us, that link is down below in the description of today's episode. But let's begin. Okay, so taking a look at your indexes today, the Russell 2000, so small caps, are the outperformer, up 1.08%. NASDAQ 100 is the biggest lagger, up 0.34%. Not a surprise as we are gearing up for Micron earnings. NASDAQ up 0.65%, S&P up 0.6%, and the Dow is up almost 1%. Bond yields today, look at that. Bond yields down 9 basis points for the 10-year Treasury. This is big. Okay, that's a big move for bond yields. You've really went from, the high at 4.66% back on May 19th. But after the Fed, you were sitting at about 4.5%, down to 4.40%. 2-year Treasury yields are down 5 basis points today. This is more so giving you a better gauge of how the markets are looking at Fed policy. And following the Fed, we hit the highest levels on 2-year Treasury yields we have seen in years at 4.23%. Today, again, they're down about 5 basis points. You're sitting at 4.15%. I think there's still a lot of room for the short end of the curve, the near-term bonds, to come down and for the markets to price in easier Fed policy. And I think that's going to be a big tailwind for stocks going ahead. There are 2 big reasons why oil is down so much today. Oil is down about 3.5%. Oil briefly dipped below $70 as tankers transit the Strait of Hormuz, but you're still at $70.58, down $2.63 today, down 3.6%. You're basically back to where you were right before this conflict started. And it looks like you're well on your way to being in the 60s pretty soon. And this is a big deal for Fed policy and for what direction this market takes. And there's really 2 reasons for this. First and foremost, oil tankers with 35 million barrels have exited the Persian Gulf through the Strait of Hormuz since the Iran deal. Donald Trump says Iran has informed the U.S. there are no tolls being sought on the Strait of Hormuz. UBS today says nearly 80% of oil supply disrupted by the Middle East conflict will return within 3 months, rising to about 90% by year end. UBS cut its Q3 supply loss estimate to 7 million barrels per day from 12 million barrels per day, but warns full normalization will take time due to logistical and operational bottlenecks. But that's good enough, right? I mean, 80% of the oil supply disrupted to come back online within 3 months. Yeah, no wonder the price of oil is falling so much. Most people were expecting that it would take 6 months to even get 50% of the oil supply back onto markets, let alone what people were thinking 3 weeks ago, a month ago, when the war was still going on. So you've kind of flip flopped everything in terms of oil markets and oil supply in just the last month or so. Iran's deputy foreign minister says access to attacked nuclear sites and to nuclear materials will solely be examined and resolved within the framework of the final agreement. So, without getting into every headline via the US and Iran negotiations today, it does look like things are moving in the right direction. No tolls on the Strait of Hormuz. Nuclear examiners will be able to enter Iran once the final deal is done. These are two of the biggest holdups, potential holdups in getting a deal done that look to be resolved. So it's really just a matter of time before we get a final deal. India today said they made substantial progress in recent months in trade talks with the US. The second reason why oil is coming down so much is Trump last night posted on Truth Social ordering the Justice Department to investigate oil companies over high gas prices. In a post to Truth Social, the president said customers are being gouged by oil companies, saying that the price of oil is falling a lot faster than gas prices at the pump. So, yeah, good for the consumer, I guess. He says here, quote, gasoline prices better start going down a lot faster than what I'm seeing, Trump said. Trump said, quote, the big oil companies are not dropping their prices at the pump commensurate with the sharply lower prices they're paying for oil. Those prices are dropping like a rock. JP Morgan today increased their S&P 500 year-end price target to 7,800, says Outlook approaching blue sky scenario. Now, Scott Bessent today came out with a lot of big headlines as well, and I want you guys to pay attention to the ones that have to do with Kevin Warsh, and we'll get into those in just a second. But Scott Bessent says that structural inflation has been in services. Bessent said, we love doing the right things to keep the U.S. dollar strong. Bessent says you can have a strong dollar when rates are being cut. So that's the first thing that makes you kind of tilt your head a little bit. Rate cuts? Huh? Markets are pricing in hikes. And we're going to look at the probabilities in just a moment. Scott Bessent says, mostly, I think we're going to have a strong dollar on U.S. growth. Bessent says, I think real wage growth to return to pre-April cadence. Bessent said, in February, I thought inflation would be close to 2% by midsummer. Bessent says, I don't think anyone should do Fed dot projections. Bessent on the Fed says, I applaud Warsh for eliminating forward guidance. Bessent says, I used to trade against the Fed dots. If you guys don't know, Treasury Secretary Bessent is a billionaire. He worked under, was it Soros or one of the big funds for a long time. He was a hedge fund manager. I mean, so he kind of knows what he's talking about. Bessent says you can have high GDP growth without traditional inflation. Bessent says we need to have an open mind on the inflation impact of the Iran conflict. He says we also need to have an open mind on AI productivity. Bessent says there is a good chance of a repeat of the 1990s extended economic expansion. Bessent says that Warsh came out tough talking about inflation. Bessent on Fed rate cuts says Trump has confidence in Warsh. Come on now. Wall Street thinks Trump appointed a hawk at the Fed. Are we serious right now? I hope not. Kevin Warsh said on the press conference that what he heard around the table in regards to the Fed dot plot is Fed officials, they jotted down their dots with a pencil with a big eraser, meaning they're subject to change at any point and quickly. And I would just make the simple argument, and I don't think this is a reach here, that oil going from 112 down to 70, during the last month or so, probably means instead of one rate hike, as the Fed was projecting, we're looking at a pause. If anything, we could get a cut if inflation numbers come in to the downside. The markets took Kevin Warsh as a super hawk and started to price in multiple rate hikes for this year. I mean, that was the wrong interpretation. And I think the margin here, the spread is set up where we're going to have some big positive surprises coming in terms of dovish Fed policy. Like, what do you think happens to markets here if we're expecting a September rate hike and we're pricing in a pretty strong probability of a December rate hike? By March of next year, you're pricing in about equal parts chance of one hike or two hikes, about a 16% chance of three hikes. Look at this. There's a greater chance of three rate hikes by March 17th, 2027 than even a pause. Let me say that again. There is a greater chance of three rate hikes than a hold through March. What do you think happens if we hold through March? Yeah, a lot of people are going to be off sides. Bond yields are going to come down aggressively. And that's going to be really good for the markets. Now, we can see today, if we take a look at the heat map, there's broad green out there, specifically in cyclicals. There's a lot of green. That's partially because oil is coming down, expecting less aggressive Fed policy, perhaps. Look at travel services, cruise lines, Airbnb, Expedia, Booking. These stocks are up between 2 and 9% today. A lot of them falling between 5 and 7-ish% higher. Financials outside of asset management doing pretty well. Major banks, not as much. Capital markets, not as much. But your others like credit services and Berkshire doing quite well. Software having a pretty good day today on net. Semiconductors and that whole trade's a little bit of a mixed bag heading into Micron earnings. Okay, now Micron is going to be a critical component to this market going ahead. And you kind of have to break this market up into two different camps, right? You have the AI trade that's pretty immune to Fed policy. It's pretty immune to, some of the problems the rest of the markets have been dealing with, right? Everyone's been crowding into AI stocks as the Iran war has been going on, financials and cyclicals and small caps and all of those other areas. They've been, coming under a lot of pressure. And AI stocks, that's not the case, right? Well, it's because AI has its own story right now. It's this new technology. There's massive money heading into this area. And look, you overheated expectations, right? Like Micron has tripled in the past 2-3 months since their last earnings. You've priced in so much good news, it's going to be almost impossible to deliver on it, let alone if you get bad news on earnings, which is not my expectation, by the way. So, look, when you break this market into two categories, first, small caps, cyclicals, financials, software, these areas that benefit from lower oil, a less aggressive Fed, the Iran war ending. We'll see if the Ukraine war ends, a stronger economy, stronger consumer. Those areas have a lot of positive tailwinds going for them. At the same time, the AI trade being overcrowded, FOMO, just everyone's bullish on these areas. They're overextended. They've tripled in some cases in the last couple of months. They are set up for maybe a rotation, maybe a move lower, and for some of the money to go into other areas, despite what will be very strong results from Micron today at 4 p.m. Now, Micron will be reporting. They're scheduled to report right at 4 p.m. today. If we look at expectations for Micron earnings, you guys have to understand the company gives you guidance, then the analysts have their estimates, and then the stock has kind of the whisper number, what's priced in to move the stock higher or lower, right? So there's really three numbers you got to be thinking about here. For this quarter that's being reported today, the company gave guidance of 33.5 billion. Okay. Micron's going to beat that estimate. Okay. How much do they beat the estimate by? Well, analysts are projecting 34.38 billion. So I think Micron's actually going to come in at around 36 billion in revenue. So they're going to beat their own estimates by 2.5 billion. I think for next quarter, Micron's going to give guidance around 38 billion. I wouldn't be surprised if it was as high as 40 billion, somewhere in that 30 to 40 billion number. Um, the analysts are pricing in likely a number in the 36, 37 billion number. So it's going to look like Micron beat and raised. The problem, I think, will be the whisper number is above 40 billion. Now, there's no way to actually know precisely what a stock is pricing in. Like, there's no magical metric to look at to know what a stock is pricing in on earnings, what that whisper number looks like. That's why you have to go off of what the stock has done. So when you're looking at Micron, that's went from, the Iran war crash lows at 310, $310, yeah, 310, and ran up to 1200, adding 700 billion-ish in market cap. I mean, you're pricing in, I would think, well over $40 billion for that whisper number. So if Micron comes in at 43 billion for next quarter's guidance, you might have the stock kind of flat, right? That would look like a massive beat, massive raise. But the stock is priced in a lot of good news. I think you really need a guidance number above 45 billion to send the stock like 10 or 15, 20% higher. You need something that's really big. And I think it's almost impossible to get a guidance number that big based on supply. That means pricing would have had to go up a lot, or is projected to go up a lot during the rest of this quarter and for the last 3 months. So it's one of those tricky situations where I think you've just priced in a lot of good news. And even though you're going to have really good earnings, the stock is most likely, in my view, going to come down. Now, I think this could start a little bit of a quote unquote run of the mill correction for AI stocks. Put this into context with the other side of the markets, cyclicals, financials, small caps, areas of industrials and software, where the war with Iran ending and oil coming down and maybe the markets being overly hawkish or overly aggressive on Fed policy expectations, some of that stuff easing creates a better market condition for the rest of the markets to do well. Like, one of the big reasons AI stocks have ran so aggressively is because, I mean, hawkish Fed, high oil, high inflation, war with Iran that was going on. Why would you want to be invested in small caps, cyclicals, financials, or anything else for that matter? Just put all your money in AI stocks. That makes a lot of sense to me. Well, now that these things are coming to an end, there's a compelling bull market that's starting to take place in other areas outside of AI. So I think that's something that could weigh on these stocks as well. I think Micron potentially comes down to the 850 level over the next couple of weeks. That would be a peak to trough decline. I know this is going to look nasty when you guys hear this. That would be a peak to trough decline. Oh my gosh. Of about like 30%, I believe. 30-ish percent. Yeah, around 29.5% from the high. And that would only take you back to where you were on June 9th. It's June 24th. Yeah. So it would only take you back to where you were like 2 weeks ago, which is pretty phenomenal. Could you sell off more than that? Of course, if you get bad news. I don't think you're going to get bad news from earnings. I just don't think you're going to have impressive enough earnings to drive the stock higher after it's tripled since last earnings. And this could bring down the entire AI trade for a little while. And I do think you want to be careful in the stocks that you are buying right now. I think you want to be de-risking portfolios heading into Micron earnings. I don't think this is the moment where you want to take a lot of risk in AI stocks. You want to let them cool off. You want to let the correction happen. After the correction happens, then you want to go out and potentially start buying some of these stocks, right? If Micron comes back to $500, that looks like a better buy to me. Would I be buying Micron at 500? No, I think there are better opportunities out there. But if you like Micron today and you have a chance to buy it 50% lower in 2 months, that would be an opportunity. Don't think it can't happen. It very well can happen. So right now I think is the time to get your shopping list together. If you like Marvell, I like Marvell. Do I love it where it is today at 270, let alone in the 300s? No. But if it comes down to 150 in the next 2 months, is that a good buy? I would think so. Qualcomm's like a big play on wearables and all of that. It's come down quite a bit from its high of 259. They actually have an analyst day today. They're sitting at their 50-day moving average. That's going to be important. But look, if this stock comes back down to like 150, is that an opportunity? I think so. I think AI is going to do very well. I think AI is alive and well. But the problem is expectations ran too far, too fast. And I think this is the, moment of reckoning, if you will. And I know that's a strong word in the near term where you're going to get a correction, expectations need to level off a little bit, and then it will open up that buying opportunity. In the meantime, I do think small cap, cyclical software, financials could actually benefit if Micron does what I think it will and kind of sell off after earnings, go through a run of the mill correction. You could see a rotation into other areas, kind of like you seen yesterday, where yesterday all AI stocks were down quite a bit, or like 90% of them, and then the rest of the markets did pretty well. So, just my thoughts. I like de-risking the portfolio heading into Micron earnings here. I like, potentially taking a profit on some of the AI stocks, potentially buying other areas, buying a put, making positions free. That's what I mean by de-risking portfolios heading into Micron earnings. Again, just my thoughts. Let me know your thoughts down below in the comment section. Hit the like button as well as subscribe to the channel if you guys have not done so already. Have a fantastic rest of your day, and I will see you in the next one.